I think I'm gonna be a day trader. What's going on, everyone? Gilman back with another video, and what you just heard me say is what a lot of people have been doing since the start of the COVID pandemic. We've seen a lot of people rush to apps like Robinhood and start trading. People who've never really traded before in their lives are now starting to enter the market. And if you're thinking of entering the market too, there are some things that I want to share with you before you make that step, so hopefully you don't make the same mistakes that a lot of new traders make. So the first thing that you need to do is make a plan. What does that entail? That entails finding a stock you like, typically in a sector that you're more aware of, right? News that you follow, stuff that you're really aware of. Next, you need to figure out, well, what is my entry point going to be? Where do I see this stock going in the near term, in the long term? At what point am I going to cut out of this trade? For example, let's use American Airlines. That's what I used in my last video, and if you haven't seen that video, go ahead and watch it. It tells you a lot of important information about how to get started and some things you need to know before you get started. So let's take American Airlines for example, right? And American Airlines is a stock that's used to trade in the high 20s pre-COVID, went all the way down to 9 because, well, no one was really traveling anymore and the future outlook was really uncertain. Went all the way back up to the low 20s, it crossed 20s, and now it's back at, I think, around the 13, now it's back at the $13 mark. So let's say, you're looking at American Airlines and you think it's a good buy at $14. You think in the near term it can go to $15, right? So those are some of the things that you need to come up with, right? You want to buy the trade at $14, so that's your entry price. Your stop loss is $13.50 because maybe it's crossing the VWAP line, maybe it's not getting the support where you think it'll get support, so if it goes below $13.50, you need to stop out of that. And you're going to sell finally when it hits 15. So entry point, stop loss, and exit points are three things that you definitely need to have before you enter any trade. So that's called making a plan. The next thing you need to do is you need to make sure to stick to your plan, right? So as you're trading, a lot of times you might get caught up in the emotions of things, right? So you buy American Airlines at $14, you're buying 100 shares, so you're investing $1,400. Now, it goes down 50 cents to $13.50 where you had told yourself you were going to stop out of the trade. But you go, I really don't think I should take a loss on this. I think American Airlines will rebound. So you drop your stop loss down to $12.50 from $13.50, right? And American Airlines continues to fall. You drop it again to $12. Now, if American Airlines continues to drop to $12, instead of taking a 50-cent loss on 100 shares, so you would have lost $50 in total, now you've gone from reducing your stop loss from $13.50 to $12.50 to $12. Now you're losing $200 at an entry price of $14 and exit price of $12, rather than just losing the initial $50. The other thing could happen on the other side where it reaches your $15 and you decide to not lock in your profits. If you don't lock in your profits at 15 thinking it's going to go to 16 and it drops back to like 14, 14.50, whatever it may be, then you've kind of lost that potential profit you had there. One thing that I like doing personally and I would recommend you to do as well is to scale into a trade and to scale out of a trade. Right? So if you think $14 is a good buying price and now American Airlines is going to start moving up, buy a third of your position, a quarter of your position, 50% of your position. Point being, don't buy your whole position at 14, right? Watch to see the direction the stock is going. If it goes from 14 and you think, man, once it crosses 14.25, again, these are based on technicals, this isn't numbers that you're just coming up with, right? You're looking at the charts. And after it hits 14.25, then the next point of resistance is $15. Then you buy more once you get confirmation that it's hit past that 14.25 mark. What that allows you to do is, in the chance that the trade does end up going down, right? So American Airlines, instead of going from 14 to 15, is going from 14 towards 13, right? You're only in the trade for half of your amount, and that kind of gives you two options. A, it gives you the option to cut your losses, but now your loss is going to be a lot lower. Or B, if it goes down and then starts an uptrend, now you can average in at a lower price, right? So you bought half of them at 14, you're gonna buy half of them at 13.50, and now your average cost is 13.75. So when it goes back up, now all you need to beat is 13.75 rather than having to beat $14. Let's take the other example now. You bought it at 14, American Airlines is going up, you're doing great, you're a happy person. It goes from $14 to $15. Instead of, greed taking over and you think, oh, it's going to go to 16, 17, easy, right? Everyone's predicting that to happen. You can still lock in some of your profits. If you have 100 shares, you could sell 20, 30, 40, 50, right? You can sell half of your position at 15, which guarantees you 50 times a dollar. It guarantees you that $50 in profit. And that way, if you really think it's going to continue going up, you still have half of your position or whatever you decide to keep to kind of take advantage of that continuous uptrend. So that's the whole making your plan and then sticking to your plan. The next thing I'd recommend you doing if you're a new trader is paper trading. So what paper trading does is it simulates what you would do with real money, but with fake money, right? So I know a lot of brokerage accounts allow you to do this. I know TD Ameritrade through their Thinkorswim platform allow you to do this. And what it'll allow you to do is it'll make sure that whatever you plan on doing with your real money is working. I know it could be very hard to do. The market's hot right now, it's volatile. Left and right, you see a lot of people making money. I did this, made an easy $1,000. And it's, the fear of missing out really takes over and, everyone wants to just jump in, trade right away. It can lead to some profits, don't get me wrong, but it can also lead to people losing a lot of money. And one way to avoid that is to do what you're doing already, but just do it with paper trading. Make sure you can understand where the stock's getting support, where the stock's getting resistance, and all that stuff. The next thing I'll recommend you doing is always to diversify your portfolio, right? So you don't want to be 100% invested in one stock, because if that particular stock does poorly, then your whole portfolio does poorly, right? So maybe you've heard someone make a lot of money in a specific stock and a specific option, and they go, hey, I've made all this money. Here's what you should do. Never put all of your money in one thing. It can lead to great upside, but it could also lead to great downside. Let's say airlines a couple weeks ago were really hot. Stocks were up 30, 40% in the course of a week. You decided to put a lot of your money in. The few weeks after that, the 1 or 2 weeks after that, American Airlines, Delta Airlines, United Airlines have all been coming down from that high, right? So being fully invested in one stock, in one industry, in one sector, can again cause you great upside, but also great downside. So always, always, always diversify, right? Again, don't let fear of missing out on something great stop you from making smart decisions. And the last thing I'm going to tell you is taxes. It's the last thing anyone wants to hear, but nonetheless, it's very, very important. So there is what's called capital gains tax. So if you buy stocks for $1,000 and you sell them for $2,000, and for this example, we're going to assume that you didn't hold them for a year, so we're going to assume that it's short-term capital gains. And those taxes can be anywhere from 10% to 35%, depending on what your income is. So that's something to also keep in mind is if you're making $1,000 in profit, don't go and blow that $1,000 in something else. Make sure to keep a portion of that, whatever your portion amounts to. It might be 22%, it might be 24%, it might even be higher if your income's really high. But make sure to kind of keep that money aside to pay those taxes when they come due at the end of the year. So yeah, make sure that you keep that money aside just to pay Uncle Sam at the end of the year. And another thing to keep in mind is if you make $1,000 and you lose $1,000 in a stock, that's not always going to mean that you don't owe taxes at the end of the year. There's what's called a wash loss. What that means is that loss from the sale of a security is not going to, you're not going to be able to show that loss on your taxes. And the way that works is if you sell a stock for a loss and you rebuy the same stock, or technically a similar stock, I don't know how the similar part of it works, but let's say you sell American Airlines for a $100 loss, and then within 30 days from the time of selling, you rebuy American Airlines, that loss gets added to your cost of the stock itself, right? So you're not allowed to use that $100 loss until you now sell this one with the cost basis being high. So wash loss is something that you should definitely look into. And just, again, another reason why, if you've made money, make sure to not put all of that into something else that you think is going to be the next big thing, right? Always make sure to keep some money aside to cover taxes as well. I know it's really boring, but also very important. So with that, we've talked about making your plan, we've talked about sticking to that plan, we've talked about paper trading, we've talked about the importance of diversification, and then the last thing we talked about is taxes and making sure that you have that when Uncle Sam comes knocking on your door come next April when your taxes are due. So with that, that's all we had for today. Really hope you learned something new. If you are taking that next step towards day trading, we wish you nothing but the best. If you did like this video, if you found it helpful, please like, subscribe, share with your friends, comment down below on what you want to see next. Let's remember to be a bit better every single day, and until next time.